Hi everyone, welcome to the Daily Forex Review. Today we're going to review how the week has started and what is the technical situation on Eurodollar. As usually, I would like to start by reviewing one of the tools that we offer on the website. It's called Winners and Losers. This is based on currency indices. So basically, you can see the strength and weakness of a particular currency instead of a currency pair. And here we have multiple time frames and 1 hour, 4 hours, 8 hours. And it's sometimes great just to see what actually happened over the Asian session. So it's approximately 8 hours. And we can see that there was no much volatility in the market. The US dollar is the loser of the day. It lost 0.05%. It's not really much, and we can see that the gainer of the day basically is the British pound, but also the volatilities are rather, let's say, limited, and there is no clear indication at the moment. We can see some weakness from the US dollar, but let's now look at the charts to see what is actually happening in the markets. And as usually, I always prefer to start by looking at higher time frames, at weekly, at daily. Sometimes I just remove all the drawings and I start from the scratch so that you build the charts without any biases. So let's have a look at the daily chart. We can see that the euro dollar is trading in a very wide range. It's sort of a triangle. You can see the trend line, the upper trend line is right here. And here we have the support line. The price was hovering above this level and it stayed there for some time and was actually feeling quite comfortable. It didn't rebound immediately. So right now we're still in the correction phase. We can see that there was a downward movement, quite sharp in the US dollar. So we rebounded. However, still this correction was limited. We can further go to the 4-hour chart to see the latest movements. There was also kind of, we can draw this a range, a downside range. And actually, finally, we can see that this range was broken, and now we have a sort of a impulse that materialized starting from last Thursday. This was right after the FOMS meeting. And usually, technically speaking, if we want to set some targets, the first target would be, let's say we can measure the range of this formation. So we can do it in the following way. We can see what is the basically how wide is this formation. So it's approximately 60 pips, and then we can from the level where it was finally broken, we can draw 60 pips, and that would be the first target. So we can see that the market has reached the first target already. And right now it's trading in this area, and the growth would be limited by the level 119.70. I think we can also clearly see this level right here. It's just below 120. 120 would be a psychological level, and we can see that the market has touched this level multiple times, here, also right here. There was also an approach right here, and later that was the mid-June, and I think there's going to be a very strong resistance at this level. So in case if we see further improvement in the US dollar, I would say that probably here we might see some correction from the market, a really strong resistance. And if we look just at today's movement, we can see that there was a certain impulse, a small correction. I think that would be just within, let's say, the levels. Probably should be around 38%, the second level of Fibonacci. I can go to the next hourly chart. Here we can see this impulse. And if I'm going to just add, that would be the right, or it's the opposite. So if we're going to draw the Fibonacci levels, we can see that we actually reached the second level of Fibonacci line. So the trend is not yet canceled. And here I also have the pivot lines. Sometimes I prefer to look at the pivot levels just to see where the market is trading, because this gives a very good understanding of what's happening right now in the market. So the current price is above the pivot level, so this shows some bullish sentiments in today's trading session. So and that can actually continue today. It looks rather it's going in the upward direction, and I would expect that this kind of strength would be still very limited. And I don't recommend any positions at the moment, because generally the market is in a sideways direction. And here I would like just to remind and to tell you that flat is also a position. It means it's a very strong and good position. If you decide not to have any position in the market, it also means that you have a certain opinion. And here, as there is no clear trend in the market, and there is, I would say the situation is pretty balanced. And also fundamentally, there are no clear signs about rate hikes in the US. So with no clear fundamental indications, with no clear technical picture, I would rather say that this situation looks rather flat and neutral. Let's say when I would consider buying euro-dollar, I would rather prefer, well, one of the opportunities is to buy right now and to target the support level, resistance level, 119.50. That could be one possible trade, but that would be very risky. And in this case, you would need to put the stop level quite far away. Probably just, yeah, it wouldn't compensate you. The take profit, the stop loss would need to be much lower, and it is not worth taking this risk, in my opinion. Another opportunity for going long, that would be just to wait that this level would be broken, and then once we have a strong impulse, and maybe that this impulse is also supported by some economic release, some data, we could then consider going longs after 120. Or another solution would be just to wait further to see the clear continuation of a trend and to go long US dollars. At least for me, that would be much more favorable position. I would rather prefer, if I look just at the daily chart, I would say I would rather expect this support line to be broken, and then I would rather prefer to go with a long-term trend and short euro dollar and target levels like 117 and further 116. And then if this level would be broken, I would consider further short positions on the euro dollar. So for today, I would rather say that the picture looks mixed, neutral. We're going to have some economic events released today. If we look at the calendar, we're going to start with PMI indices. This is the previous week. This is for this week. So what's interesting in the calendar? Let me just refresh it. And for Monday, we're going to have PMI releases in Europe. Those are going to be the final releases. So usually for PMIs, we have preliminary and final releases. But what's really interesting is going to be the ISM manufacturing PMI release. And we're expecting a very strong number that can be quite supportive for the US dollar. So I mentioned it in the previous review that Friday we have a very strong number from the Chicago PMI, and this is a good indication, and it's sort of a leading indicator for the ISM manufacturing PMI. And apart from that, there's nothing else interesting. But further, Wednesday we're gonna have the services sector. This is also very interesting to follow. We're gonna have the ATB non-farm employment change. This is a sort of a good predictor for the non-farm payrolls, which are the main event of this week. So on Friday, every first Friday of the month, we have this economic release, which attracts the most attention of the market. So let's see how the situation evolves and if we're gonna have more volatility today. So thank you for watching, and if you enjoy this video, please subscribe to the channel and ask your questions if you have any, and stay tuned for next releases. Thank you for watching.